Hi, I'm Romeo Caparasso from Tax Accounting Adelaide. Today I'm going to explain pay-as-you-go tax instalments and what they are, and they can be difficult to understand in my experience, for a lot of our customers. So I'm trying to explain what they are, how they come about, and so that you can be a little bit more understanding what's going on, and is that tax, what does this tax relate to, is usually what the confusion that a lot of the clients are having with these. So I'm going to try and explain this. So let's just start with a normal background. When you're an employee, for instance, you have tax taken out of your wage, and that's put aside for your end of year tax return. What's different with business owners and investment revenue earners is that doesn't happen. So the ATO is all right, these people are not paying tax during the year. Let's form a system so that they are paying tax during the year, so that when they go to do their tax returns at the end of the year, then there's not a tax shortfall and they have to pay a lot of tax. So in a way, they're getting their money faster, and also you don't have to come up with a big tax amount payable when you do your tax return. So that's the background of why the system started. It used to be called the old provisional tax system, for some of you that were around that long ago. But basically, the ATOs generates a form of taking some money from you to pay some tax towards your next tax return, and they call this a pay-as-you-go instalment system. So let's recap. When you're a taxpayer and you have a significant amount of non-wages income, which basically will be business income or income from investments. When those two, either or both, are a significant amount of income, and you're not paying tax on those during the year, and you lodged a tax return last year to say that you had those forms of income, the ATO will then say, right, you come and enter this system called the pay-as-you-go instalment system. And from then on, you'll pay instalments based on your last tax return. So if your shortfall of the tax for the year was 4,000 and you got 4 quarters to go, they'll take 1,000 per quarter from you during the year and put that as a credit to your next tax return. All right, so hopefully I haven't lost you so far. What that can typically do is, for instance, if you come in and you've been a business and you've just earned, let's say, a lot of money, and you've got a tax bill of $10,000, what it may feel like is, wow, I've got to pay the $10,000. Hopefully you kept some of the money aside. If you didn't, that might be struggle to pay that. And in addition to the $10,000, every quarter you're going to get $2,500, which is 10,000 divided by 4. You're going to get a quarterly installment bill towards next year, because the ATO is anticipating you're going to earn that again. So that's what's going on with pay-as-you-go tax installment. Now that's provided you've got 4 quarters to go. If you lodge the tax return late in the year, so like the last quarter, it may even want, in your June quarter, it may even want one tax installment of $10,000. So that's really going to feel hard to pay. So in a way, I'd say to clients, it feels like you've got 2 tax bills in 1 year. But of course, once you are on top of your tax installments, things become a bit easier. So because next time you do the tax return, you won't have the $10,000 tax bill, like the example I just said. You'll have much less to pay. If you've gone up a little bit, your tax return will work out if there's a little bit too much or too little in the tax refund. So yeah, so to recap, it's a ATO generated system for people who have business or investment income, and they haven't paid enough tax in their last tax return, and therefore the ATO generates some tax for you to pay every quarter, so it goes towards your next tax return, so that you don't have to pay too much tax, and also they're collecting that during the year, which is good for the tax, the ATO and government as well. So if you have, and a reminder that every time you lodge a new tax return, the pay-as-you-go installment will change to your latest figures on your latest tax return. So the latest figures of non-wages income, so business or investment. So yeah, hopefully that understands. Can you do much about it? Well, look, if you're in big trouble and you can't pay this, you can obviously ask for a repayment arrangement with the ATO, as always with all types of tax debts. Additionally, if things have changed, so for instance, your business income was a one-off, or business profits are way down, or the investment income may not occur again, for instance, you may have a big capital gain that's not occurring again, you can vary this legitimately and vary the tax on the instalment down. And typically you need to vary that. You need to have a reason for that and fill that out on the instalment activity statement which you receive. And also just want to say, the first time you're going to get this is the ATO will write to you and say you've been entered in the pay-as-you-go instalment system. And from then, you will receive either an income, an instalment activity statement in the mail, or through your MyGov, and you need to actually lodge that or vary it and make your payment. So that's all you need to do. If you do make your instalments during the year and you then go to do your tax return, you're in a much better place because you already have that tax paid. So I know that it may seem that it's more tax, but you need to understand that there's maybe a previous tax payable from your last tax return, and there's also these pay-as-you-go instalments, which are going towards your next tax return. So in a way, these tax instalments are not quite dead tax yet. They are going towards your next tax return, and there may be a refund situation when you do your next tax return. So in a way, it's not completely gone forever tax. There is a hope that you may get some back when you do, or may not be enough when you do your tax return, but it's still not finalised. It's going towards next tax return, if that makes sense. All right. So hopefully that puts you in a better place. If you've just been shocked at what on earth is pay-as-you-go tax, why is this? Haven't I just paid my tax? Hopefully I'll explain what is actually going on with that. Thank you very much. I'm Romeo Caparaso from Tax Accounting Adelaide. Bye.